Hey, good morning, everybody. This is Henry. About 4 minutes, we're going to be getting the U.S. non-farm payroll number. This is the number that most traders has been waiting for. Consensus expectation puts this number just around 150,000. There's an estimated range between anywhere from 100 to about 180. That's what the market is expecting. So we're going to be looking for the usual deviation about 70,000. So on a 220, you will be extremely positive for the US dollar. We'll be looking to buy the US dollar. And of course, 70 or less, you'll be bad for the US dollar. We'll be looking to sell the US dollar. I think the key to understand the non-farm payroll is that if the economy is bad, it means that we could see weakening not only in the fundamentals of the US dollar, but also in the potential for the Federal Reserve to introduce another round of quantitative easing, and that would also devaluate the US dollar. So on a bad number, US dollar would weaken, and on a strong number, which not only adds positive to the US dollar, but also diminish the possibility for further quantitative easing from the Federal Reserve. So those are what we're looking for. And right now, we should be getting this release in about a little bit over a minute. And according to the analysis, we're looking either at the dollar yen or the Aussie dollar to trade. We're seeing the Australian dollar, of course, is being extremely weak. And the Japanese yen has been strengthening from yesterday to today. And we're seeing, of course, Japanese yen strengthening across the board on further risk aversion concerns. So we'll be looking at these two pairs, and of course we can also look at the euro dollar. Euro has been strengthening a bit and was able to maintain a foothold above the 12300 level. So it might not be the best currency to be trading. So we'll be looking at the Aussie dollar for further weakness, and also we're looking at the dollar yen for a possible rebound in the event of a strong release. And just remember, this is going to be a retracement trade. So if there's any trade that we need to do the retracement, it would be the non-farm payroll. And there's definitely no jumping into the market immediately. We'll wait for the market to digest the number before we even jump in, because there's a lot of numbers being released at the same time. We have the private payroll, we have the manufacturing payroll, we have the non-farm payroll, which is the headline payroll, we have the unemployment numbers. So a lot of things could come into play. So definitely need to wait, and the prior payroll revisions could also come into play. All right, stand by, everybody. We should be getting this release shortly.
Non-farm 69,000 more than 150.
69,000
down to 77,000 from 115,000. Unemployment rising 1/10 to 8.2%. Private payrolls 82,000, well below the 164 expectation. Prior buys down to 87,000 from 130,000. Manufacturing payrolls also lower, 12,000 versus 15 expected, with the back month revision lower. Hourly earnings 0.1% is 1/10 lower than expected, but prior buys up to 0.1%, 1/10 higher than previous. Hourly earnings year over year at 1.7%. Weekly hours at 34.4 is 1/10 lower than expected as well. Household employment at 422,000 versus minus 169,000 prior. Underemployment rate 14.8%. Personal income 0.2%, 1/10 lower than expected. April spending at 0.3% is in line with expectation, with back month revised down 1/10 to 0.2%. PC deflator at 0.0%, 1/10 lower than expected year over year, also 1/10 lower than expected at 1.8%. PC core 0.1% and 1.9% for the month and year over year. Canada GDP 0.1% is 2/10 lower than expected year over year, 1.6%, 3/10 lower than expected, with back month revised up 1.7%, up to 1.7%, 1/10 higher than the previous number. Year quarter GDP at 1.9% in Canada. Again, reviewing the payroll data again. November 69,000 for non-farm payrolls, below the 150 expectation. Private payrolls 82,000, below the 164 expectation, with back month revisions lower. Unemployment again rising 1/10 to 8.2%.
We're having a really bad number. We got 69,000 instead of 150 expectation. The private payroll came out 82, almost half of the 164 expectation. Manufacturing payroll at 12. And unemployment rate actually went up to about 8.2%. So the numbers are not really good, considering all of the releases we're seeing. Of course, US dollar strengthening on the back of a bad number seems to be that the market is still going with the risk aversion route. We're seeing a little bit of uncertainty right now in the market. Of course, the winner that we're seeing is the Japanese yen. The dollar yen has dropped about 45 pips at one point from the pre-release till now. Dollar yen is now sitting around the 77, 78, broke below the 78 handle, which has been holding the pair for quite some time. So we're seeing stronger reaction against the Japanese yen and slightly weaker reaction against other majors. We see the euro coming back a little bit, perhaps on the possibility that the US is going to likely having potentially another round of quantitative easing. So we're seeing the euro now reversing its previous course. Originally we saw the euro dip down 31 pips, about 122.92. Right now we're back around the 123.30 levels. The market has actually reversed its course a bit on the euro. Like I said, if this is anything, it is going to be a retracement trade base. So we're seeing the market now moving up and down, not really knowing where to go, according to what we saw in the market right now with the euro. And of course, the dollar yen reaching below the 7,800 level. I think the downward potential for the dollar yen is limited. So I would be more inclined now, perhaps buying the euro than going anywhere. We're seeing the euro initially drop and then went back up. I think we might be looking for a potential buy on the euro if the euro would dip down towards the 12300, seeing that the euro has been very resilient around the 123 for quite some time. So we're going to be waiting for retracement. This data, of course, adds a little bit of weakness to the US dollar, just the fact that now traders could make the speculation because the economy has deteriorated to a point that we might actually see some Federal Reserve action, because Bernanke did talk about how the Federal Reserve would act for him, that the 100,000 level for the job creation is the line in the sand that he's been looking at. So speculation for further Fed reaction is definitely now on the table. So yeah, I would expect a little bit of market sentiment change on the subject of quantitative easing after this release. At the very least, it brings back QE3 for this year. Now, if we get another one that's about the same, then that would really be negative. Now, just to give you guys a little bit of idea, the birth death adjustment came at positive 204,000. So that means despite of such a positive adjustment, we still have only positive 69,000 of the employment growth of the non-farm payroll. So without the BND adjustment, we'll definitely be looking at a negative number. So that's one of the reasons why the market also reacted higher. So the actual headline number should be negative, but because of the birth death adjustment, we're having a positive number. So that also doesn't sit very well to the non-farm payroll. Now, I'm not going to say, yes, we're going to have further easing on the table, but it does seem it's a possibility. So I think I'm going to be focusing more on the euro rather than the dollar yen, because dollar yen, I think the movement is limited. We're looking about 30 pips or so. The euro, I think we have slightly better chance to see the market rebounding. So it's about 8 minutes after the release. We're seeing the market is dancing around the 30s. I like to see if we can get a little bit of retracement, perhaps down to the 123.10 level or so before we make our decision. Now, if you look at the market, with the exception for maybe the dollar yen, euro is probably showing net gain against the dollar after the release. So I think we'll probably see a little rebounding on the euro dollar. Of course, euro is not the best choice, but if you look at the strength meter out of the second to the Japanese yen, euro is showing about 570, so it's actually stronger than most. And we're seeing today with the euro coming back, I guess the market reached some level of fatigueness that we're no longer seeing further sell-off in the euro, at least temporarily. The focus is no longer on the euro. So on an overall US dollar weakness, we're likely to see a stronger euro. That's just the way market is. So I'm going to focus on the euro dollar pair and let's see if we can potentially jumping on a trade. Now I'm expecting perhaps the market to give us a little bit of retracement, maybe around the 20 level. I think that would make a little bit of sense for us to be jumping on a euro buy. I think the market will at least give us 30 to 40 pips or so. Alright, so let's see if we can get a little bit of retracement, at the very least down to the 20s or so, and from there we'll jumping. Alright, let's getting around. Hold on. Okay, we see a sharp drop. Good. Alright, let's getting right around here, guys. It's getting. Alright. So we should be getting around the 15 level, 123, 15 level, and just see a decent drop from the 30s down to the single digits now. So now we're seeing the market going to test the 123. So a couple seconds, we would have the market going below the 12300 level. Alright, so we're seeing the market making a new low now, almost immediately. Okay, let's see if it's going to be able to hold here. Remember, this is a non-farm payroll, so we're going to see a little bit of movement and a little bit of push on both directions. I think the overall sentiment still puts the US dollar weaker, at least after this release. So I wouldn't give up on this trade just yet. Okay, I'm seeing the market retesting the lows. Now we're right back around the 123, so a little quick spike. Alright, so we're gonna put our stop loss just below the dip, which is 85, so we're going to put our stop loss around maybe 80. So we're going to be using like around 35 pips of stop loss on this one, 122.80. And then TP, we can look at the higher end of the range, 123.65. So we're going to be going for about 50 pips, and we're going to use about 35 pips of stop loss. Okay, so 122.80. And the TP will be 123.65. That's what I would be doing. And let's see if the market will give us our take profit points later. Alright guys, let's take 30 pips off the table. We just touched it initially. So let's take it off the table. And we should move the stop loss to break even, just to make sure that the trade never goes back again.
If in a bubble, if the U.S. market's traded in a vacuum, the answer to that is yes. I would think we're going to get that. But the fact is, we got a lousy number out of China. We have Europe that is still completely aimless. So
all right, so we just took 50% of the trade off the table. The rest of the 50%, we're going to try to hold it all the way to the 65. The idea, of course, is we're expecting a weaker US dollar, so euro in comparison will probably be a little bit stronger. So we're gonna wait for this trade, and hopefully you will reach our take profit status. But at least right now, we're at a no loss position. We're never going to lose again because we already adjusted our stop loss and we're already taking some profit. Alright, so sit back now and relax. We've done the work for the day. We're going to take it easy now. So it's a great feeling. I'll be back in a little bit. Alright guys, we just TP'd on our trade. We're going to come back to look at the market at 10 o'clock. So I'll see you guys in about half an hour and we'll do our daily analysis.